Single stocks are
Single stocks is not
pretty
it.
much a gamble. Pretty much a gamble. I don't buy single stocks.
What? Look, I'm not here to debate. If you're an avid Dave Ramsey follower, that's awesome. I think he gives pretty solid advice if you're looking to get out of debt and stay out of debt. But in terms of investing and finance, he should stay in his lane because honestly, comments like that are ill-advised at best. So what do I mean by that? Single stock selection is actually the best way to invest your money. If anything, I would love for you all to learn the options market because the first bit of advice you'll ever get when you hear about options is that is highly speculative. Oh, wait, that's very risky. You'll hear all of those or combination of phrases when you learn about the option and or the more complex way of saying it, the derivatives market. But I'll be honest, once you learn it, you'll never go back to regular trading. Now, back to Dave Ramsey's point, single stock selection being risky, far from it. If you have any idea on what you're doing in the market, it's the best way and the only way to select securities. Now, if you find that to be risky, maybe you shouldn't even be investing. Maybe you should be investing in taking a finance course. If you don't know anything about the stock market, before you jump into a IRA or a 401k, maybe consider taking an accounting course. Financial accounting would be preferred. Take a general finance course. And then from there, if you want to continue to learn more advanced, consider doing statistics. So, back to my main points. There are 3 reasons why you should do single stock security selection. The first being price discovery. Price discovery means you will do your own homework, you'll learn the proper valuation of a company, and again, if you're educated enough and you can look at the balance sheet and you can look at the 10K filings on these stocks, you'll know whether they're valued properly or overvalued. And then you'll make a good sound judgment on selecting the right securities that match your risk tolerance, i.e. price discovery. Secondly, the easiest thing, if you take Dave's advice, or if you just roll your money in funds or fund management, you're going to pay lots of fees. You might pay low fees, some you may pay high fees. When you choose stocks by themselves, there are 0 fees. And lastly, there's no weighted return. So if you pick winners and you have losers, they don't pull your winners down. So just keep that in mind next time you're thinking about investing in single stocks.